Do you know where you fit into the market? What's our role? Okay. What's our role as traders? Where do we fit into the market? Now, everyone thinks, well, to trade Forex, we're in this industry to make a lot of money. Normal. It's a normal way of thinking. We're here to make money. We're going to make so much money that we can't even count it. Even the bank is going to be tired doing this. That's the perception, right? That's the perception of that's what we're here to do. We're here to print money. Okay. Now, here's the thing. Here's the controversial part. Okay, let's start with the basics. What happens here? Okay, you guys all know this. I want you guys to follow along with me 100%. Market goes up. It pulls back. It goes up again. What's the public doing? What is the world doing right now? Are they buying or selling? Yeah, we're buying, right? Okay. In this process, the market pulls back again. Support resistance. People are buying, right? Markets are up. We want to buy. And then we want to buy. Why? Because we're price action traders. What is a price action trader? Think about it. A price action trader looks at price and determines value. Okay, so he's looking at price and he's like, it's up. We all know it. My dog knows it. My cat knows it. My neighbor knows it. Hey, Jean, which way is the market? It's up. Okay, good. You see, she knows it too. Now, here's the thing. Price action means you're no longer trading with indicators, correct? So we all know that you're no longer trading with indicators. But did you ever sit to wonder that, did I become the indicator? Like, I removed the indicator, but am I the indicator now? Am I just chasing the market? Hey, you're going up, take me. Oh, you're going down? Okay, I'm coming too. Are you just following the market? Is that really what price action trading is to you? Okay, so just think about that, okay? Everyone with me so far? Okay? So how a big person, okay, or a big player thinks is like this. So here's Mr. Big Boy. Okay, right? Here's Mr. Big Boy. Okay, now how is he thinking? Do you think that's a good deal for a larger player? Okay, everyone will say yes. And why is that? Because it's good risk to reward. It makes sense. It makes educated sense to do this. Here's the thing about the larger players though. They don't care for this part. They don't care for that. That is not in their dictionary. Because everything shows up like that. What they're worried about is if they see that, if there is a loss, that means there's a possibility. They're like, I don't like that. I don't like that I am putting my neck out there to make a little bit extra money. No, I'm not going to use my neck to make some money. I'm going to use someone else's neck to make extra money. This is the difference between the average person, the way he thinks, and the larger player. Okay, control risk. Okay, so now you understand how the big player works. Now, are the big players trading? Why are the big players in the market? Are they trying to say buy at 1.2000 and then sell it? So they're going to buy it here and then they're going to sell it at 1.2100. Okay, how many pips would that be? Oh, I made 100 pips or $1,000. You think that's what big players do? They're interested in that $1,000 or $10,000? You know how much money there is in the industry? How much money there is in the world? They're not looking to make that $100, $1,000, $10,000 in a day, $100,000 in a day. That's too small thinking. Too small thinking. Because everything is about risk, and this to them is risk. Okay? Because you have to put your money on the line to make this 100 pips, correct? So now think about it. We're going to use Euro USD as an example. Euro USD. Let's say the economy is strong. Okay, Euro is strong and it's just starting to rise. Okay, and if the euro rises, the dollar is obviously going to be weak. Correct? For this chart. So what these guys do, they play the game that's not currency related, but outside the currency. They're like, okay, I'm going to go to Europe, anything that deals with euro, I'm going to buy factories. Okay, I'm going to buy factories. I'm going to buy real estate. Okay, horrible, horrible house. That house will fall. So, factories, real estate. Okay, they go on to buy expensive things like, I don't know, furniture, expensive jewelry, anything that holds value, okay? Markets start to rise. Okay, these are the American players, right? American players coming into the European market and start buying stuff. Big boys, right? Big boys, cash full of cash, pockets full of cash. I'll buy that, I'll buy that, I'll buy that. They're using currency as leverage. Okay, so they buy it. Markets start to rise. Okay, as it gets up to a higher point, higher point. Now, when you buy a factory, how much risk do you have in a factory? Well, are you just going to buy a dying factory, a factory that never makes money? Are you going to buy that? You're not going to buy that, obviously. You have the money, well, you're going to do your research and you're going to buy a good factory, right? You're going to buy a winning factory. So they buy a factory, let's say, that has $1 million of profit every year, okay? So they buy it at a very low price because of currency exchange. They buy it, factory is making money, and currency is also rising, which makes the valuation of the factory start to rise. The factory is now not worth $1 million, but in actuality, it's worth maybe $10 million, for example, as the prices keep rising. Same thing with the real estate. He got it at a low price, very low interest rate when the economy was bad, and as he starts rising it, interest rates, everything starts rising because more and more people are starting to get into the market. And as prices get up to here, and this big boy has information the average person does not have. Okay, that information the average person does not have. So once it reaches up to here, and he's like, I think at this point the US economy is going to start getting stronger compared to the euro. Which direction would that go? Okay, if the markets are going up, that means euro is strong and dollar is weak. And then suddenly if you see the US economy is going to start getting stronger, the charts are going to go this way. Okay? And then the game continues onto the US side. Now, but wait, what about all the stuff that they bought in the European currency? What do they do with that? So one big boy goes up to the next big boy and says, hey man, I got 2 factories, a house, an oil plant, a lot of land. I don't want it anymore. You want it? What do you think the other big boy says? He says, what do you think? I'm stupid? I don't want that shit. I know the economy is going to go down a little bit. Why do you want me to buy it? Okay, so what are we going to do? Let's create a market. Because in this market, all the big players don't want to do any exchange with each other, but who will do this buy up here? Traders are dying to say, give it to me. I will buy it at this expensive price. So they need a lot of people to get into the trading. That's why foreign exchange is the #1 most liquid market in the world. So think about it. What is a trader's job? Where does he fit into this industry? He fits in as the goat that takes the risk. That takes the risk at the worst price possible, because for them it's like, oh my God, I didn't expect people would just chase the market like that. We just hand over the debt to them. Yeah, it's your problem now. Thank you for the expensive price. I'm out of here. Strange, isn't it? But this very simple logic is misunderstood by 99.9999999% of the market. You have this conversation with anybody and they're going to be like, aren't you supposed to buy an uptrend? You see? Do you understand the logic now? When we're looking at this, and we're like, so what's the role of the traders? Now, I know, like I said, in the beginning of this webinar, I know it's going to be like a borderline conspiracy, okay? But is it not true? Aren't we not just buying assets that's gonna fail from the big boys? Because there's no control on our trading. If we just happen to be in the right direction also, it's just a matter of time, we're gonna give it back to the market anyways. What we as human beings do on the market is a very funny phenomenon, right? It's a very funny phenomenon because we are trained to look at the market outside of our universe. Okay, let me explain that. We're trained to look at the market apart from what we naturally do. Okay? On the charts, we look at prices rising and we want to keep rising. Okay? But in real life, you go into a Toyota showroom, for example, or a car dealership, and the guy is like, well, yes, sir, welcome. This car that you really, really like is $20,000. And you sit there and you're like, no, I'm going to give you 40. Please, take 40. Do you do that? Come on. Do you do that? No one does that. No one does that in their right mind in the real world. But for some reason, the roles are reversed in the market. Everyone's like, it's 40,000. No, I'll pay 60. I don't care. It's 70. I'll pay 90. I don't care. Why don't you care? Why don't you care? Because that emotion that rides up from, because that feels like if I would have entered here and if I was to have exited here, imagine how much money I would make. That's the thief in the night. Imagine how much money I would make. Imagine. Okay? Right? This happens to everybody, right? It used to happen to me too. Right? Happens to everybody. The objective now, okay, I want to spend the whole first half of the webinar educating you of how the system works. Okay, that's half the battle. If you know how the system works, all you need to know is, okay, if I know how the system works, where do I fit in as a trader? Am I just a liquidity provider? Am I just feeding the market piece by piece until all my savings are gone? Or am I going to step up, increase my knowledge, be better at this game, and learn how? Okay, so what now? Okay, so again, those of you who understand, congratulations, because you are a step closer to financial freedom. Whether it's in trading or not, you're a step closer to understanding how the game works. How the game works. Okay, and before we end, I'm going to even give you some tricks today. Okay, so what now? What now? So you're looking at a chart, right? Now do you guys understand why I put so much emphasis on money spot? Do you guys understand that now? Because it is the only spot you can get in without being noticed. It is the only spot you can get in without being noticed. So let's discuss it. There are some people who are new in here. So what is this money spot you say, Navin? Let's take a look. Okay? So when we're looking at a bigger picture uptrend, okay? And then on a smaller time frame, it starts doing this. On a smaller time frame, everyone's like, wow, look at the speed it's coming down. Look at the speed it's coming down. It's a sell. It's a sell. But normally, okay, so let's say there's a buyer here. Okay, just think with me. Don't think in terms of charts. What do I do? Don't think like that. That's minute thinking. Try to understand the logic, because once you understand the logic, you will know what to do. Okay, don't just think, well, where do I enter, Navin? Where do I put my stop loss? Where do I put my take profit? You know how many times I get that question? It's like, just tell me what to do. I'm not going to tell you what to do. Learn it. Okay, so when you look at this stuff, right? You look at this stuff and you're like, markets are going down, they're going down, they're going down. Okay, in this process, before it did all that stuff, it was buyers here. It was buyers here. Here was buyers, here was buyers. Let's say this price right here, is $5. Just a crazy price, it's $5, okay? Okay, so the price is $5, and then the price suddenly rose to $5.50. Okay, they went up to $5.50, and you're like, oh man, I was wanted to buy it at $5. I wanted to buy it at $5. Okay, come down to $5 and I'll take it. Come on. Come down to $5 and I'll take it because I can afford $5. I've done my research. $5 seems to be the good price for me to buy this item. Okay? Don't treat currency like it's not an item. It's just like an item. It's like property. It's a car. You're not going to move until you get that price. Okay, here's what happens. Prices go up to 550. 550, then from 550, like, come on, come down. 590. Oh my God, it's gone even higher. You know how much money I could have made? Imagine. You know how much money I could have made? Imagine. Prices rise up to $6. Everything in the house is breaking right now. You see the dog flying because you kicked them. You see, plates breaking. Your screen is half shattered. Everyone's just so angry. Oh, God, I missed that profit. Okay? So up until this point, you're watching it. And then you see this sudden move down. And you're like, oh, good. It's coming down. It's coming down. I'm getting a price lower again. It's getting close to 575. You're like, good. 575. Okay, good. Then it goes up again a little bit. But then it comes down harder, like very hard. I'm like, whoa. What's going on? Why is it so aggressive? Okay, at this stage, you turn on the news. News is like markets are collapsing. That's the reason why you see sudden hard movements coming down. Markets are dying. Okay, everyone's in panic mode. Oh, okay, and as price inches closer to $5, the original price that the guy wanted, the poor person. And the poor individual actually says, I actually want to sell. It's not a buy anymore, it's a sell. He gets caught up into this movement, into his emotional rattling, because he was so emotionally involved on the upwave that when it comes down so aggressively, he's like, it's a sell. Okay. So as it's coming down like that, okay, support equals resistance says sell. But support equals resistance here says buy. That's a money spot. The big players want to go long, the short-term players are selling it. Now, this same concept, why? You always heard me say, who wins? The smaller guy or the big boy? Who wins? Think about it. Okay, so big boys, right? Now, why do I always say big boys are going to win? Sorry, let me see this thing. Yeah, why do I always say big boys are going to win? Because look, in this process, when the big boy is on this momentum, he's rising. And this stuff, if the market comes crashing down in one shot, that's different. But the fact that he's crashing down in multiple pieces, that makes the emotions rile up. Because the first time, he wasn't interested in the sell. Second time, he got more interested. He got scared. Third time, even the news is saying, oh my God. Everyone's panicking, right? So once everyone panics, everyone turns sell. And if whoever has a Ferrari up here is now saying, you know what, I'm going to take that Ferrari and I'm going to sell it for 50% discount because I think Ferrari is going bankrupt. I have no idea what's going to happen to Ferrari. And my decision to buy it at there was not good, so I'm just going to sell it. And this guy here is like, oh, 50% discount, do you say? Why, thank you. That's the price I wanted. Thank you, I will take that 50% discount. I don't like Ferraris, but I'll take it. It's a good price. And as the prices rise again, I will sell it off later to the next guy who wants to buy it so aggressively. I'll give it to that guy. And I just made a quick buck. I made a quick profit from someone who's greedy and fearful. And this guy is just patient, like, I don't understand this game. It's so lucrative. People just keep giving me money. Are you starting to get that logic? Yeah?